You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Hope everyone's having a great start to your day. Wednesday morning, most of the news today, we're going to have a lot about NVIDIA going into earnings. It's been about, last night, the State of the Union was the big talk, what's going on there, but not a ton else in the news so far this morning. Been more about earnings than it's been about, general stuff. So there's nothing wrong with that. We like to see it. And so far, markets look like they want to go risk on. We'll see if that holds up throughout the day. But the Dow Jones right now set to open up about 30 basis points. S&P about the same, up about 30 basis points at 69.25. And the NASDAQ up about 43 basis points. So tech leading the way out of the three indices, or at least the NASDAQ. So we, we'll watch and see what we get, especially going into NVIDIA's earnings are going to be a huge part of the positives and negatives we get. VIX, our volatility read to see if we're going risk on or risk off, has slightly cooled off back below 20. So we're down around 19 here. 1910, not really a big read one way or the other. It's still paying a little bit of a premium for volatility hedge. And rates are drifting slightly up. We do see the 10-year has moved up a little bit, the 30-year up a little bit, but nothing too big there. That's what we're going to see in a lot of this, a lot of drifting versus a lot of conviction move here today is what we've seen so far. Dollar, same thing, edging slightly higher, but still seeing resistance from the same 50-day simple moving average that's been weighing on it since the 19th. So the last 6 days or so. Is today the day we break through it? That's what we got to see. Key resistance, key resistance, key resistance. When we take a look at metals, they're catching a bid so far today. Gold back at 51.88, up almost a full percentage point, trying to get back up towards yesterday's highs and Monday's highs, which were in the 52.50 range. And silver seems to be the winner this morning, up over 4%. And if it breaks through 92, we get back into the area of trying to fill that, huge red candle we had back on the 30th of January. But strong move up by metals, as you can imagine. That does also have metal miners moving up a little bit today. When we start to go through the movers, the gainers on the day in the pre-market, it's going to be a lot of the metal miners in that area, of course. So we're going to see that. Oil has picked up a little bit here. We see WTI and Brent crude both up about 30 basis points. Not a huge move one way or the other, but a little bit of a move. Nat gas still depressed under $3 here at 292. And Bitcoin and crypto in general made a nice rebound last night. Nice short squeeze. Most of this was perpetual future led, so that it does make us at risk for, a drop back down if we can't break and hold above some key levels. Right about at it here on Bitcoin. Need to get back above 66,500 or so to feel a little bit more comfort level. Ethereum, a nice better bounce and got us back above that 1900 level that had been key support. Looks like it wants to challenge and see if it can break what has been our key resistance at the 2000 level. So nice move up by both, but I will point out we don't have really the spot buying accumulation yet that we need to see to say that, this is something sustainable. We'll see a lot of nice runs to the upside during the bear market. So be wary here. It does have room to squeeze. There is a little bit more juice left in both of these possibly today. Bitcoin has enough room to go easily to 68 today. And when you're looking at Ethereum, definitely that 2050 areas where you start to run out of steam. So that's what I'm looking at there. Overnight, all of the overseas markets are having a good day. So again, a lot of stuff leading to maybe we have a strong risk on day to day. Man, does that always worry me when every single indicator is pointing, or every single sort of thing you look at is pointing in the direction of up. Man, does that feel like a rug pull's coming. But with that being said, European stock market, the stock's up about a 0.5 percentage point today. Hong Kong, the Hang Seng up 66 basis points today. And the winner has been Japan, where, so much of this move has been really in Samsung and the other memory makers there. So there hasn't been a huge breath. It's really been technology surging, and really on that side, it's really been the software names. Sorry, there I had to mute for a second. A little under the weather this morning. So that's what we're seeing so far across overseas. And again, as you can imagine, when everything else is sort of pointing to the green, what else is pointing to the green? The different sectors of the S&P. Energy up about 27 basis points. Utilities flat so far. Materials are up 64 basis points. Technology up almost 0.5 point. The one laggard so far is consumer staples. And part of that we're going to see is Lowe's, while they had an earnings beat, is down slightly today. So that is dragging. And there's a couple of others we'll look at that are dragging in that sector. But again, other ones, industrials up over 0.5 percentage point right now. Financials are up 0.25 percentage point. So risk on so far is what we're seeing throughout it. Taking a quick rundown through the Mag 7 here. We see NVIDIA, which we know that's the monster earnings report this afternoon after the bell will be NVIDIA. They had a strong day yesterday, up slightly, and again today up about 80 basis points as we get into the open. 194.38. I was trying to think about what I think we're looking at here. Hold it 1 second. I mean, if we break during, the cash market, that 195.75 area, we've got some real room to try to make a run back towards its all-time high. The question is going to be, even if they promise the world, is it enough to, impress invest traders? That's what matters, right? So we'll see how that plays out. Apple, the only one on the Mag 7 that's down slightly today. I didn't see any real news that would have been causing that, but they're down about 39 basis points. They were up 2.5% almost yesterday, so maybe just a little bit of a breathing room there. Excuse me. Google up about 35 basis points here, erasing yesterday's losses, but still, this one's one that's been a little bit beaten up and still down. Microsoft, the one that's really been beaten up, down still at that 391 level. but this is trying to get a 2-day rally going there. Amazon, another one that we know has been really beaten up, has really got back to the highs. You know, if you want to talk about trying to fill the gap, if we can break through that 212, it starts to try to fill that gap to the upside from its earnings fall. So we do have some things that are trying to bounce back here. Meta having a decent 2-day run here, up about a half a percentage point between yesterday and today's pre-market move. And Tesla, which saw a strong day yesterday, up over 2%, is up about 30 basis points so far this morning. Netflix up about 1.4%. Looks like they might be moving, you know, out of the driver's seat in that attempted takeover or attempted purchase of Warner Brothers Discovery, with Paramount raising their bid. So we will see how that goes. I did mention Lowe's has been a laggard so far. I just grabbed the wrong one. And we can see they're down about 3% this morning. The hardware retailer beat earnings expectations, but did issue weak guidance. So it won't help ease some of the fears about the sluggish demand for home improvement. And as I mentioned, down a little over 3% off the lows of the morning, to be honest with you. They did report adjusted earnings of $1.98 a share. And sales climbed about 11% from a year ago to $20.6 billion. And that was, again, a slight beat on both of those ends. Same-store sales were the standout in the report. They rose about 1.3% from a year ago, much better growth than what the street was looking for and better than what Home Depot reported just yesterday. So, again, following Home Depot's earnings, this is a better, result, but it was overshadowed definitely by the company's soft forward outlook. For the current year, they expect adjusted earnings of $12.25 to $12.75 a share and total sales of $92 to $94 billion. Both of those figures were below what analysts had forecasted. So the CEO did point out that, as BigBeat talked about yesterday, as we've been talking about for months, that, housing is still a concern, and they do better when their housing market is moving. Either people are fixing up their homes to sell them, get ready to sell them, or people buy new homes and they want to do renovations and things like that. They're not seeing it, and again, it's just because we don't have houses moving. That is not the case. They did also say that customers have voiced concerns over the general economic uncertainty, including inflation, growing job concerns, and higher financing costs. So those were put in there. Those were sort of the same or echoed what Home Depot said the day before. And again, that has lows down about 3.19. I didn't look to see what Home Depot was doing today. They ended the day up about 2 points yesterday. They're pulling back about half a percentage point here today. So their earnings are causing a slight pullback against Home Depot's move up yesterday. Circle, from the stablecoin and crypto entity, nice little earnings beat, up over 20% here in the pre-market, back at 74. They absolutely crushed earnings. I saw their CEO, Jeremy Allaire, all over TV this morning, which was good timing for him. They reported earnings of 43 cents a share for the fourth quarter. Wall Street was only looking for like 16 cents, so that was good. And their revenue was up 77% from a year ago. And again, topped what the analyst expectations were. So I think that really surprised people. As I heard the CEO talking today, one of the things that was asked directly of him or pointed out by one of the sort of skeptics out there was, JP Morgan's talking about how JP Morgan's got its own stable coin now. Is he going to see so much competition. And what they pointed out was, that if you take the other stable coins, they're almost just a rounding number to the top 3 or 4 with, Tether and Circle and Paxos's product. There aren't many competitors there. They're getting little pieces, but not enough business there. And as he also pointed out, there isn't much demand for one done by the big legacy banking companies. So we'll see how that does play out. The amount of USDC in circulation grew to 75.3 billion. So they have, 75.3 billion in dollars that they're holding, which allows them, they make most of their money by holding short-term treasuries and making the earnings off of that. If you don't know, Tether and Circle, if you combine those two entities, they are the 3rd largest purchaser by segment of U.S. short-term treasuries, following just Berkshire Hathaway and 401k funds. So definitely there. Good morning, Zora. Glad to see you up bright and early. But again, definitely strong for them. They reiterated their outlook for multi-year annual growth rate of about 40% for their USDC in circulation. He talked to the fact that they continue to expand globally as more enterprises, developers, and public institutions integrated digital dollars into real-world payments, treasury, and on-chain financial workflows. It also echoes, again, if anyone that read the Citrini report, that talked about how AI is going to eat us all up or whatever. One of the points there was that, the combination of AI agents and the lack of friction that blockchain provides really is the future probably of how payments go. That's why we've seen, Visa, I don't know if they've bounced back, but Visa, MasterCard were under pressure yesterday. They've bounced back after that report came out. Although when I say that, where are they in regards? Well, they bounced back because, they were trading. Yeah, they're well below their 50-day moving average, their 200-day simple moving average, and down. Visa's down 12% year to date, even with this bounce back. So, they've been under pressure, those payment processors. We've seen, how TradFi wants to get in the world. There's rumors PayPal was up tremendously yesterday. Excuse me, apologize again for the voice. On news that Stripe is maybe interested in purchasing either the entire company in a merger and acquisition, or at least parts of the company, as they look to, get a foothold into the fintech blockchain payment platform that PayPal is. So PayPal, up over almost 8% in the last 2 days. And you can see folks must have started to get wind of that on the last week before that moved to the upside. But that's, what we're seeing. So Circle definitely moving to the upside. Some names you can watch for sympathy would be Figure. Up about 3% here. Coinbase, which is up. And I will say all of the crypto adjacent names were up in general, as Bitcoin and Ethereum, as I mentioned earlier, have taken nice moves back to the upside here over the last 12 hours or so. And you can see Coinbase up about 5%. Coinbase, keep in mind, is a partial, I don't want to call them owner. They're a partner in USDC, I guess is what we would call it. They have a very big vested interest in a partnership with Circle with USDC. So again, part of the reason they're up is not just the crypto adjacent part, but a play off of Circle. Other names that we would look for is Gemini, GEMI maybe. That one's a much cheaper one. Yeah, up about 3%. So in general, like I said, the crypto adjacent names, and I guess I could have just gone to this watch list where you have them all. All the crypto adjacent names are up today. There definitely should be on your watch list. Could be some runners here. The one that was getting hit or wasn't up or was up the least, I guess is what I want to say, although it was up 10% yesterday, was hot. They did have earnings yesterday, and they did have both a miss on their top line revenue and on their EPS. And with Hut, even with that bad news, that is with them still having a big move up in their last year. Let's take a look here at, I mentioned Paramount Skydance. They do look to be in the driver's seat here after the CBS owner raised its offer for Warner Brothers to $31 a share. The board of Warner Brothers said the bid could reasonably be expected to lead a proposal superior to the deal it agreed with Netflix. Warner Brothers shares were basically flat on the news. It was helping them. Netflix is up about 1.5% on that news. It has seemed throughout most of this that traders would prefer for Netflix not to make this huge, CapEx massive investment in it. Because every time that there has been news that maybe Paramount, when Paramount stepped into it with the hostile bid attempt, that that helped, that moved up their price. And then again, when things have happened, it's been the inverse. Another one here, looking at the morning's winners and losers. First Solar getting hit pretty hard here today. FSLR down close to 17%, 16.5%. After issuing downside revenue guidance for the 2026 year. The solar panel maker expects fiscal 2026 revenue to be about 4.9 to 5.2 billion, which is below the expectations that had been in place of around a little over 6 billion. So pretty significant move, 20% or so down in their estimation there. They reported fourth quarter earnings of $4.84 a share, 30 cents below the average estimate. Revenue grew 11% from a year ago, primarily driven by an increase in the volume of modules sold. So that was one strong takeaway that they had there. Net sales for the full year were up about $1 billion, from 4.2 billion to 5.2 billion. And, the stock has been down this year, as it is year to date, but it's up about 55% over the last 12 months. So you do have to keep it in line there. And they are, or at least they call themselves, the largest US-based solar technology and manufacturing company. And they said that their 2026 guidance assumes that the current US policy environment persists, that tariffs will remain about 15% and will last for the 150 days. And the aluminum and steel tariffs will still take in place. So they spoke towards the tariffs and said that these new assumptions they're making are based upon them staying in place. So it does help you, at least get a gauge for what they are thinking there. Another one under pressure, and another area we know has been under pressure in general, is Workday. Down about 9.5% here so far today, or in the pre-market today. They had solid fourth quarter earnings. I don't have it in front of me. This one came a little later. They had both a top line revenue, EPS beat. Doesn't really matter. It looks like, we know software has been under so much pressure. And they did, give less than stellar guidance and a disappointing year-end backlog of subscriptions. And that sort of is the combination that not good for the markets in general. Shares are down, as I mentioned, almost 10% here in pre-market trading. Forecasts for the first fiscal quarter of the year and the full year weren't as good. Also, guidance on subscription sales for both periods came in below analyst expectations. And the outlook for adjusted operating income fell flat, while the year-end subscription backlog was about $1 billion below what analysts thought it would be. So, and Workday is down about 50% over the last year, as we said, we know so much pressure on companies like this. CEO tried to push back against the AI, narrative. And I'll read you his quote. He said, "You've all heard the narrative out there that HR and ERP, which is enterprise resource planning, will be replaced or relegated to the background by AI. I personally just don't see that happening," he said. And he was the co-founder and chairman. So we'll see what they say, but analysts have sort of already spoken. I think it was Davidson cut their price target to 125, so below what it was trading at close yesterday, above where the pre-market price is, and moved it to neutral. And that upside to growth remains the focus, when it comes to these agentic opportunities. These companies are just, definitely under pressure right now. Cloud software model is at risk, and it doesn't look like it. And, nothing today ended it. We're going to have, some other earnings today in the same area, at least, or in software. We're going to have Snow today with theirs. So we'll see what happens there. They're holding steady, actually a little up, getting ready to go into their earnings. So we'll see how that plays out. CRM, I believe, has earnings today also. Salesforce, they do, or is that tomorrow? What is that? Yep, they have earnings today. So that will be an interesting one to keep an eye on also. Let's stick with things that are already had earnings, and let's look at a company that I'm a fan of personally, Kava. Nice little move to the upside. They're up about 10%. If you don't know, Greek Mediterranean style food. They issued upbeat sales forecast and reported a solid fourth quarter earnings, despite the concerns about snowstorms and last year's government shutdown. They have a huge amount of stores in the DC area, as I know from living there. Seeing some things come in, maintained at a buy from TD Cowen, raised the target to $90 on that. They're trading right now about 75. Seeing if any more upgrades or anything are coming in. See, now they had adjusted core profit of 176 to 184 million. So right in line with what analysts were looking at from them. And again, makes sense. I could see this one as a trade down candidate for the upper side of that K-shaped economy, maybe also where there. And I do think just the healthy sort of lifestyle, eating style is definitely coming into play too when it comes to that. Another earnings one today is Hewlett Packard. I always do that HPQ, right? They're down about 5.33%. They had an earnings beat, but they also reported that they gave downbeat commentary about the outlook from management. So that is definitely weighing on them today. They reported first quarter adjusted earnings of 81 cents a share on revenue of $14 billion. So the personal system revenue of $10.3 billion rose 11%. Printing revenue of $4.2 billion. It's, the company said it still expects adjusted earnings for the fiscal year between the same level they had said, 290 to 320 a share, but they said that that could come in much more towards the lower side of the guidance. So they kept the guidance, but said it looks like at this point we're looking to be on the low side of it. We'll see what that changes. Okay, well, it is the top of the hour. I do see he's ready to get going. Let's bring him in and see what he has to say about everything going on today.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, Big Beat on Wall Street. Let's filter the future live.
Big Beat, how are you doing today, my friend?
I am good, Howard. I think everybody wants to hear my thoughts tomorrow about yesterday and last night. I'll get right to it. That was the worst display of American history I've ever seen in my life on both sides. You're a president of the United States. You need to tell us about what you're going to do, what you're doing. And on the Democrat side, not standing for the American people, and they screaming and yelling at the president of the United States while trying to give a speech was despicable. It was unruly, and I felt that the president deserved more than that because he is the president. He's the duly elected president of the United States, and I felt that that was, to me, disappointing on so many levels and disgusting, and I'll point that out very clearly. We are the United States of America, and we should be united. And what unites us, what we have in common, is more important than what divides us. And I am disappointed in both sides. The president screaming and yelling about how the country, is doing so well and everybody's happy and life is good. He is dead wrong. The K economy is in full swing. He is saying things that just aren't true. The fact checkers now, he gave the longest speech, an hour 47, and I literally didn't learn anything, which was disappointing. I wanted to see something different. I wanted to understand it. And to me, like a campaign speech, one thing that I will say is that he has solidified himself as a lame duck president. It's done. He is done. He is done as a president. He'll be doing EOs now. I don't think he'll get much more passed. You can forget your judges, the things that he wanted to pass. I think that's done. And almost everything he's going to do is a stroke of a pen. Again, I will reiterate, the Democrat Party was disappointing, despicable, and the understatement of the year was Ilhan Omar. I hope she loses her job. The members who didn't show up should lose their job. They should be primaried and out. This is the house of the people. This is not your house. I don't care if you're Democrat or Republican. You go to see the president of the United States. You don't have to agree with him. I mean, trust me, I don't agree with most of the stuff he says. I don't agree with most of the Democrats are saying right now. But you need to show respect, and that was definitely not last night. That was a display that we showed the world that this is pitiful, absolutely pitiful, and I'm disappointed. And because of that, the market's up, right? Because they now know that the country split, and nothing more than that makes investors happy, because nothing will get done, nothing will move. And we know where we are. The tariffs are done. Okay, I don't really understand what he's doing there. I don't think he even understands. I think he's lost. But I called this, and I called it right, that I said that Supreme Court probably won't show up. I don't know how many members showed up yesterday out of all of them. Like,
I think 2 or 3 didn't, for sure.
It was way more than that. It was way more. Yeah. And look, I'll say it again. We are the United States of America, and we're not united.
I mean, decorum and things like that are supposed to matter in these places. If they're not going to lead by example, then that's part of it. Is they're supposed to lead by example.
Agreed.
I did think that was really disappointing from both sides. You knew the rhetoric was going to start. But yeah, it just shows the divide. And it shows how far the divide keeps moving away from each other. Is the other take.
Yeah, and Howard, when we look at it as investors, the thing that we're looking for is clarity and understanding of what the policies are and how we maneuver through that. I learned nothing yesterday. It was more like a campaign speech. I mean.
Yeah, and you're right. There wasn't a lot of meat that matters because, again, it doesn't help that, the fact checkers were just, at work the whole time.
They were worn out by the end of the night.
Yeah, I mean, when you say prescription drugs are down 100%, that means they're free. I mean, you can't
I can tell you they're not. I can tell you.
You can't say something's down 100% unless it's now free. So
and this guy's ahead of our economy. I mean, I mean.
Yeah. No, that's definitely it. Well, Steve, let's and like you said, I do think the takeaway for everybody is by the fact that everything's showing risk on today is back in play. Is the market's like that nothing's going to change, so to speak, right? If everyone's just fighting about what's going on, but nothing can actually happen, investors love that. So traders have come back in. Crypto started going up after that. And then the short squeeze kicked in, so you saw that acceleration happen there. And now it's moved to the pre-market. It's broadly across the different sectors. Gold and silver moving up. It's one of those everything you look at. All the world markets were up. But I have to ask you: is this? I get nervous. You know me. I get scared on days like today when every single thing I look at is up.
I think everything's been beaten up so much. I mean, that's why I ran to the I mean, I started buying. I mean, and for those of you who don't know, I did mention this earlier today on some of my social media. I did the chain link that I bought, that huge amount of chain link. I did move that and convert it up 11%. I moved that into Bitcoin. That's stacking sats, right? I took advantage of a situation. Chainlink getting beaten up that much was just silliness, right? And we know that there's actual uses for it. So I took advantage of that. When I look at the markets, is NVIDIA, the numbers are coming out. I guarantee you they're going to beat their numbers. This thing is ridiculous, right? And it got beat up. IBM, look at IBM today. Hood's up 4% today. That was an easy win for me. I might take some off today. I don't know yet, but we'll take some. I mean, it may keep going because they got beaten up for no reason. And I took advantage of that. So it's always the path of least resistance. What is the path of least resistance in this situation? Is the path of least resistance on crypto down? It's gotten beaten up. I mean, it's gotten that thing's been beaten up by 50%, right? I mean, you look at Bitcoin, it was 126, now it's 65. I mean, that's almost 100. That's almost 50%, right? That's easy. That's easy for me to go, oh, I want to buy more. I'm seeing people going, oh, Bitcoin's dead. Bitcoin's dying. It's over. It's gone. I've heard, Howard, how many times have you heard that over the last 20 years?
A million. Yeah. I will say, though, again, there's not the spot buying that's going to sustain the price movement we've seen the last 2 days. So be careful there.
Not at all. It's got to be. I just always say perps and futes and derivatives. But the number of people that are no longer buying Bitcoin itself, but now buying ETFs. Do you realize? I saw this number in the Wall Street Journal. The amount of money in ETFs is the highest ever.
Yep. Because
of young people, right? Now, if you're building ETFs just because young people are going to buy ETFs, they're not going to buy it in the future, folks. they're going to buy there's going to be other things. So be careful about that one, right? And they don't always match. So you got to be careful what you buy. But yeah, I'm gonna love today. Today's gonna be a fun day.
What do you think for NVIDIA's earnings? I mean, that's definitely the biggest thing in everybody's mind and thoughts.
It's gonna be a big beat.
Okay, I love it. The other ones everyone's going to want to know about is software names, Snowflake, Salesforce.
Well, we've been talking about AI is not going to take away your job. Not going to look. I saw a post earlier today. Someone said, yes, if you watch Twitter, you would think that the world's falling apart because AI is going to take over your life, right? And yet, do you know how many people have a paid subscription to any GPT? Any GPT, I don't care if Perplexity, Gemini, whatever you name it, 0.03% of the United States. 0.03%. Now in the world, it's like in the hundreds of thousands of 1%, right? So there's room for AI, right? But it's not taking over the world. So I don't know what people are thinking of. And I have 24 AIs running right now on my computers. 24. 18 are now in being used in our machine. Right? Why? Because I want to understand what's going on. And that's why I bought Chainlink. I knew what was going on. I knew it was oversold. So now, up 11%. I'm going to take advantage of that. Guess what? I'm not going to keep it. I can't wait to make 500,000% because it ain't going to happen, right? Not in this day and age. We have to understand where we are. So guess what? Take that money, run, put it in Bitcoin, stack sats. I now have more sats on Bitcoin than ever.
Absolutely. I love it. I love that idea. Steve, I have to run here a little earlier than normal. I'm going to, last words. So were you thinking animal spirits are back in the market today?
No, I just think I think it's just people that the shorts are getting crushed right now. and I think it's going to be a melt up all day. The Qs just took off here right now, 611.45. It's going to be a melt up all day, taking advantage of all the people who have been shorting. The number of shorts is on a high right now. Right. We're going to crunch that. So well done, everybody. If you paid attention, you listened to us, and you didn't get scared, and you doubled down. Today you're smiling, and you DCA, dollar cost average, and you have a much better portfolio, and you look better. No, Mr. President, you were wrong. The portfolios aren't better than they all have, because
that's for sure.
Not everybody has one.
That's the other part. Absolutely. That's where the K-shaped economy will continue to exasperate. So I'm going to leave you with that, everybody, and BigBeat will take over for us.
I know what everybody wants me to do. They want me to get right down into it. Let's go right into it. Let's get down to the charts. So I'm going to start pulling charts up. Start sending me some things that you want to look at. I'm more happy to do that. I do have some stocks I do want to look at today, and that is what we'll start with. Let me just do that right now. There we go. And I'm going to start. We'll just start with NVIDIA, because I think people are asking me about NVIDIA. There we go. Put myself in a corner. Nobody puts baby in a corner, but why not? There you go. NVIDIA has been seeing this, and Jensen Huang now will be on CNBC tomorrow morning, obviously, because of his earnings. But you can see where there are some sellers up here, and 1, 2, 3. This is a daily chart, and look at this, NVIDIA hitting those highs. So if the earnings are good and guidance is good tomorrow, we should see some push up tomorrow, and it should go right on up. If not, then we'll see a little bounce back, but probably get down about 179, 180. That's where your stop limit is, right? So wherever you end up buying or end up selling, that's where your play is here. So 193 to about roughly 180. So you've got the numbers here. All right. Yeah. I'm starting to see a lot of talk about stocks are cheap this morning, and that's not true. They are definitely not true. Not any sector, to be honest with you. It's not. But is it better than it was a few months ago? Yeah, it is. But no. The MSCI is up 11% since yeah. So we really aren't seeing that, right? So to be honest with you, no, this isn't happening. So look, folks, I see this. I see these markets. I know it's happening, and I can tell you right now that this is what's happening, right? That there's this rounding mentality. Now, if you had listened to a lot of the talking heads over the last few weeks, the world was ending, and I drew this on the chart several times, right? That these big, you can see them, right? If you don't have that understanding, then that's what we haven't moved. There's not been this massive sell-off and this massive buying. It's just algorithms. Because look at the volume. If I scroll back, these are daily charts. Nothing has changed. If you look at this chart, 594 to 637, 40 points. That's been your whole. I mean, we're talking about, we have to go all the way back to September. The markets have been in a range, and if you're a good trader, then you're having a good time. If you're a bad trader, you're probably looking at me going, "I hate you," and I understand that. I mean, hating me meaning hating the market. I mean me personally. But there's the lines. It's still the same lines. If you saw the lines I drew the other day, they're still on there. So this is what's happening right now, and I do like this. I do like what's going on, and I do like these numbers here. So, all right. Hopefully, we'll get Steve Flanagan in here today, and we'll see what his thoughts are on the State of the East. So too, as we call it in Washington, State of the Union. Yeah, okay. Let's look at Hood, the one that I have been buying. As everybody knows, I've been buying that dip, right? And it got out the numbers. And I'm going to pull up a little bit tighter here so everybody can understand what I'm talking about. When Hood got out, Bill, all those dip, and there was the buyers, I liked this, and that's why I bought it. So we are now at 76.20 here, down up here. I think we're going to get somewhere back around the numbers, back to about 78.30. And then I think there's a big gap here all the way to 85. So if we can break out of this today at 78.26, I think now we're at 76.08. Can we get in a couple of points out of this? I think we go right on up. I was listening to Jay Woods yesterday on CNBC, my friend, and I can tell you that he was also talking about hood. He liked it as well. So I do like this here as well. All right. I mean, you can see Link this morning. I like this, that dip buying. You can see again why I bought it down there and why I got rid of it. Bitcoin now at 66.5. That was where I really think we kept looking at the numbers, right? Here it is. When it got below my numbers, that was obviously to me an obvious opportunity to buy. I'll be careful. There's still the players that are in here. You can see the numbers in here, but I think we get back to about 71,000 somewhere around there. If we break 71,000, we're going to go, oh, but we got to break all these other numbers. Not really. There's a lot of air in here, to be honest with you. That was the big selling. So the shorts were in full control, the algos, but I think we get right back on up. So we're getting closer and closer to the highs of the morning session here. I want to call it the morning session. I know stuff, but yeah. Yeah. Hood still trying to push here, 76.02 here. Let's see if we can get back above that 80 handle there. I think we could easily get there. Another one that I obviously on my radar everybody likes is IBM. I think IBM getting beat up the last few days was just absolutely asinine. Nice little run yesterday. We saw that. We played nicely with that one yesterday. And then I bought some more on that when it got back down. And then here we are. So we'll see how it goes. See if we can get some more DCA into this. Qs are getting spanked here. Again, folks, just be careful out there. This is an algorithmic day. Looking at headlines from last night's State of the Union. That's why we talked about it. I don't talk about it for political reasons. I don't care. But I do care about it for how it affects the markets. And you can see here where the sellers were. So to me, this is a 1 second chart. I want to pull up a 3-minute chart. Why? We all know why. It's what Wall Street uses. And we're way outside of the lines this morning. So can we get back up there and stay up there? I think so. I think this is a melt up kind of day. Now be careful because algos are in fully charged. No, people are not in charge. No, humans are not in charge today. They haven't been in charge for almost 3 weeks now. So don't think that your buying and your selling, personal selling, is helping the markets one way or the other. You're fighting against machines right now. How do I know this? Daily charts. There's the volume. Why? What am I seeing? Humans trade like this with emotion. That's what we want to see. I want to see emotional trading. That's how I know humans are in it. Right now, I'm not seeing that. See that right there? That's definitely an algo period, and we were getting into it. Last year, we talked about this. That a lot of people were worried about. Will we see another April? And that's what happened in April, right? That it got crazy, but then it got back to normal. I want to see normal. I want to see volume, and I want to see nicely. So that's what we're seeing now, and that's where we're at. Oracle also pushing up here a little bit this morning too. Again, you see my numbers, but you see where I drew the lines. You can see where I'm thinking. Oracle could get back to 155, 156 here. And Q's on that sell. Yeah, bouncing off that now. There's a big sell came in, and I think they were wrong. They were sold. Wow. Wow, appreciate everybody out there. Thanks, man, for all the good wishes. And Yeah, make sure you repost and subscribe. And we've got some pretty cool things coming out. If you're not in the newsletter, make sure you get the newsletter first. I'm going to bring him in right now. Steve Flanagan, how are you, my man?
Yeah, I'm doing well, Steve. A lot of uncertainty seems to be melting away, and we're getting that little knee-jerk reaction the other way. Two big things, though, I got to throw out to the viewers here. Japan, Prime Minister Takaichi has nominated 2 reflationary BOJ board members. Why do I bring this up? Look at dollar yen, 156.74 from last week's close of 155.03. Dollar yen on the move, and I think that that's got a lot to do here. And here's why I'm going to package it up, why currencies are so important, why money moves first. Look at it. Japan now going to have a reflationary, which is easier monetary policy in the face of all the rhetoric about Japan raising rates to a neutral. Now, all of a sudden, you're going to have Fed-like appointees with Wash coming in May 15th, I believe, is the date for Jay Powell to be finished. Then you're going to have kind of a easier policy at the Fed. 2 major central banks in May going to suddenly have a dovish shift. That's my point. Watch out. That's going to be a positive underneath of the market. Not today, but it's a growing positive that I think you got to pay attention to. Watch the dollar. The dollar index here could be something, could be telling us that there might be some life underneath of this dollar, under this U.S. economy, recovery that we're beginning to see today.
Yeah, Steven, did you watch the State of the Union last night? I take it you did. And I made this mention this morning. On both sides, the most despicable display of humanity that I've ever seen on both sides. The Democrat side, Ilian screaming, and the mod squad screaming. Again, Al Green getting kicked out of the House. I mean, I understand civil disobedience, but I don't understand the attitude of the Democrat Party. They had an opportunity last night. The Republicans are in dire straits. They haven't won a single election since Trump has won. And quite frankly, I don't think Trump's really passed much. And his poll numbers show that. I know you don't like poll numbers, but not even the Fox Business numbers this morning were even worse. I think the president looked presidential in some aspects, and he looked like a freaking dolt in sometimes because he couldn't keep his mouth shut. How do I boil all that down as to trading, Steve? How do I take that and understand what it is I'm supposed to do? I would have thought. I mean, you said that you thought there was more clarity here this morning. I'm less clear now about what the policies are than I was when I first started watching State of the Union yesterday.
Steve, I definitely was a little bit. It was long.
Yeah.
I was very discouraged. I was hoping to strike a more middle of the road tone. Unfortunately, a lot of the Democrats, I think even some Supreme Court, they didn't show up. As
we predicted on this show, by the way, we said this on this show.
Yeah. And, what does that tell us? It tells us that we have a dysfunctional government.
Yeah.
That's what it tells us. And
he was elected to clean the swamp out, Steve.
Oh, well, he's cleaning the swamp out. That's for sure. And I think, what you're seeing is there is a side that says, hey, we don't want the swamp clean. Mm-hmm. And that was evidence, Steve. And if there was one point that I would say, wow, did Trump score huge? It was stand up if you're for Americans. And if you're not, stay seated. And the entire Democrats stayed seated. And
but the question he asked was for about illegal immigration, right? I mean, we're now seeing. CBS put out a thing yesterday about how even staunch MAGA Republicans are not happy with the way that ICE has handled these illegal aliens, that people still deserve human nature, right? We don't need to split families up and send them to jail. We wanted to get rid of the bad illegals and put them on the right path, the dreamer's path. So I agree with you. Bad illegal immigrants, or as Trump would say, bad hombres, they got to go, right? I understand that. And the drug war, that's never worked in history. I don't understand that one. But I will tell you that, or I will say this much. I'm with you on this. You and I agree on this. I wanted to see decorum, and I thought that the Democrat side did not display 1 ounce of decorum last night. I was madly pissed off at them last night. I didn't understand it. I hope Ilian gets primaried out and gets kicked out. I hope that the Mod Squad gets primaried out and get kicked out. AOC gets primaried and kicked out. And everybody here, I think, knows what side I'm on. And I was disappointed. I was angry because we are the United States of America, and I felt like we were the divided States of America last night.
Steve, I agree with you 100%. There was an opportunity there, and one side, because we have a two-party system, unlike what goes on in Europe, but we have a two-party system, and one party didn't even show up.
One party didn't show up. That's right.
They had no interest in hearing, and they had no interest in finding a medium ground. And this is the dysfunctionality of our government today. I think that Trump probably was upset.
Yep.
And he leads with his emotions, no doubt about it. But I do think that that 1 point will resonate heavily throughout America.
You do? Okay. Is that why you're seeing the markets up today?
Yes, Steve. I think, here's what I'm thinking. You got the 250th year, July 4th, and it's going to be a big event.
Yeah.
And Trump,
I'm excited for it. I'm excited for 250. It should be where we as a country come together.
Yep. And I think, Steve, you're going to see a major pivot between now and there on his part, because, and here's the, if you're playing chess, which these politicians play, the Democrats just moved their queen into an open position where a pawn is going to take it out.
And you know what? When he went after insider trading in Congress, I like that. But then he had to single out Nancy Pelosi. Look, it's no freaking joke. We all know Nancy Pelosi was insider trading the whole time, right?
Well, you're right. And I think that there may be some Republicans that fall on that too.
She's right. Zora's right. Zora says Steve, and Steve is Steve. It was the same Republicans that were shouting at Biden. So same-o. Yeah, she's right. I mean, it's this. We have devolved. If you listen at Obama talk about it, saying in his State of the Union, you may not agree with me, but let's find some common ground. Let's talk it out. Let's figure this out. George Bush, 91% approval rating after 9/11, blew that up, right? I mean, what do we need a third party system to make Americans feel better about things? I mean, I know we have the independents, but good God,
it's going to be right down the center.
Yeah,
I don't know if it's possible, because let's face it, money rules, and Trump has an incredible size war chest right now.
But which he's not sharing with the Republican Party, though.
Not yet, Steve.
Okay. Elections
aren't until November, and that's where my point was.
I would say elections have already started.
They have, but Steve, every election that we've been in, markets are opening, but every presidential election gets decided in the last 2 months.
That is true. I would say the last week in a lot of ways. Yeah, you're absolutely right. Let's get to it. 77 there on Robinhood for those of you who are paying attention at home and loving on that one. Let's see if I can get to it. Yeah, I need to pay attention here, because I do have Robinhood here, and I do need to take some of that off. So 77.33 now. I will sell half of my shares of Robinhood. As you know, I picked up half of that yesterday. I DCA'd that, and I am now, I sold half of that. Tick indicator now up. Q's ticking off here a little bit. Wow. Bitcoin right now, dollar yen. There you go. There's your dollar yen, 665 now on Bitcoin. Dollar yen now at Dixie now at 97.88. You were right, Steve. We're pushing up on that one.
Yeah, we got strong resistance here at just above 99. 99.15 is a major break point. 98.41 is the first one. There's a lot of hurdles in the dollar. Steve, as I've been saying, it's very possible the month of March is a sideways move. I do think that there are downside spikes available, and I'm positioning defensively in a UVXY, a volatility index,
okay,
against that. But once we come out of March, like I said, middle of March, the 19th and the 18th, all the central banks of the world are meeting. And as it's lining up, Steve, you've got, as I've highlighted the two, Japan and the US will be shifting to a more dovish stance in May.
Yeah.
But keep in mind, the Eurozone, the CPI came out today, 1.7% now on the year, down from 2%. A disinflationary trend is beginning to take hold in Europe. Wow. What? Disinflation?
Yeah, it's absolutely asinine that's happening there.
Well, what does that mean? Is the United States going to stand there and say, well, it's not going to come over here?
Because it will.
Look at China. China's been entrenched in disinflation for the last 6 to 9 months. So it is happening. Even in Japan, we have Tokyo CPI coming out Thursday. Watch that one carefully. It's the last number was 1.5%. That's also beginning to dip. And then suddenly in the macro look, you've got two dovish people, reflationists, being put into the BOJ. If their inflation starts dipping, forget the whole higher rate idea. It ain't happening.
But that's common sense, Steve, and I'm not seeing any.
Yeah, well, you've been preaching that one for a while. Common sense is gone. Back into the U.S., Steve, July 4th, 250 years, I think you're going to see this. Look, we know Trump, the guy is a master at the media manipulation, if you want to say it like it is. He's going to play this one big time on July, and the election's knocking on the door shortly thereafter. Steve, like you, I would have loved to have seen him turn to the empty seats and say, thank you for those who came. What can we do to make this work better?
He has an opportunity to have some serious sit-downs with the Democrat Party, Republican Party, but he's been a little arrogant and brash about how he's handling his policies. The ICE situation has really rackled up the cackles of the Democrat Party, and rightfully so. I mean, the way the ICE is handling things, that's appalling to me. Just humans in general. But he has an opportunity to say, let's sit down. But I don't think he can do it between now and November, because I think that now in November it's all about a fight in Congress, right? I mean, I can't see anything happening here.
I would have to agree there. It's unfortunate, but the negatives on ICE, I get it, but I think there's 10 times more positives on what ICE has done. For example, in Minnesota alone, thousands of these undocumented children that have gone missing that have come in and we've lost track of them have been found. I don't know, Steve. There's a lot, the headlines, the narratives. We know who controls the narratives. It's not Trump. I just think that an opportunity was lost last night. In that, I'm very disappointed for both parties.
I agree.
Because I like probably most of Americans would say I'm fiscally conservative, socially liberal. I want to find that middle party. I want to find the middle ground. and it just doesn't seem to be coming.
Let's do it, Steve. Let's start a party. I like parties. What the hell?
Quasar markets. Here we go. Let's go, Steve.
I think that's why it's why we built it, right? It's to show the middle ground, to get rid of the noise, to filter out the nonsense, and to see this. All right, Robinhood, as I showed earlier, these were my numbers, folks. You can see it. There's a 1 hour chart. It went right to my numbers. That's the chart that I drew out not too long ago. And look at that pop all the way up. And now I have a 3-minute chart up, and you can see where now that this heavy selling in the morning, of which I also participated at 77.42. And then, of course, now we're at 75.13. So, folks, that's why I have charts. It's why I have news. It's why we have everything together. It's not just one thing. Tick now down 226 here.
How's the video looking today, Steve? It's a big one out here.
Yeah, the earnings. I've done it twice now. There you go. I like NVIDIA down here. And again, look at these numbers. Again, my charts. Look at that. I've been drawing charts a long time. It just doesn't shock me anymore that they go right to my numbers anymore. Just look at that. Nice move on NVIDIA there this morning.
Yeah, I mean, if they come out, I guess it's all going to be on the forward guidance, right?
Absolutely, yes.
And if they come out with a positive forward guidance, I mean, right now, these big negatives, this AI disruption fear, I really see it as a short-term narrative. The more I look out and peer through the windshield looking forward, the more it's beginning to look more and more positive. And then people say, well, China's coming up with all these cheaper ideas. Yeah, how great is that? Because China put a lot of this in the open space territory, which means you can incorporate it immediately into your high tech that you're running here.
But I think the question is about whether or not I want to put Chinese tech into my machines so they can read all my stuff. And that's the concern, right?
That is the concern. That is a 1960s concern, communism, right? I get it. Yeah, I get it, Steve. It's probably very valid because he who controls the data wins that game in the AI space. But look at what China's Commerce Department said today. Beijing has fulfilled all the necessary obligations under phase 1.
They did, yeah.
We're ready for the meeting with President Trump. And has the U.S. fulfilled? Let's move on to phase 2. Wow, Steve, tear your hair out. Nobody ever saw that coming this year. We were talking United States, China, we're going to war. And now all of a sudden you've got two economic powerhouses walking hand in hand.
Well, I think we are at war. I don't think we're not in a physical war. I think we're in an economic war.
What would we call this one? If we had a Cold War, we had World War II, Cold War. I don't know what you call this, a tech war. But my point is, I think the markets will be shocked over the amount of integration that goes on amongst the leading countries in the world, because technology is a shared space. You can hold on to pieces, but you can't stop the internet from being available all over the world.
That's right. Well, you can. Iran did it.
Yeah, that's true. That is true. Yep.
I will say that, and I'm looking at this market right now, and let's get to it right now while we're talking about QQQ now. The daily chart, we broke out. As I said, there's my numbers. They broke out. When they break out, they're going to break out hard. They did, and there's still some selling here. I think we're having a nice little run to 614-ish, which we hit 613.32. Could be another run to the upside here. 3-minute chart, again, why? Because that's what Wall Street uses. We're seeing a little bit of less volume coming into the hour now, and we're seeing look at this. Take that chart out. Look at that, and a rounding pattern. So, yeah, it's very simple. And that's what the algos are seeing, folks. See, they're seeing check the volume and check this charts, right?
Right. And, Steve, I always used to equate. So some of the viewers, maybe you don't even understand this. You need to look at it. But I always used to equate the markets and the momentum to an old steam engine. You're shoveling the coal into the steam engine. The locomotive goes faster. And that coal that gets thrown into the steam engine, make it faster, is how many $1 trillion are sitting on the sidelines right now?
A lot.
And if you begin to say, you know what, this AI disruption fear is now moving into the rearview mirror. Think about all the money that looks at, like you've been looking, CoreWeave, a major player into this, with the stock absolutely destroyed and beaten. Now all of a sudden people say, well, I wanted to buy it way up there, and here it has been pounded down in the ground now. And this is where you're going to start seeing when the forward landscape begins to become clearer. And I will say,
I sold my CoreWeave I need to understand it. I sold CoreWeave. I did pick it up down here at the bottom. You know where I bought it, down here a few days ago, and I sold it already, but I did it here on the show, actually. So I absolutely agree with you, Steve. I mean, it's like, I look at the markets as if it's a grocery store. I know the things that I like. I know what I need to eat. Right. And so when things go on sale, I buy 2 of them. I mean, I like Catalina dressing, right? So when Catalina dressing goes for 2 for 1 at the Publix, I buy 2 of them. That's how I approach investing, right? I like IBM. You know what? I'm going to buy 2 of them. It's on sale, right? To me. Okay, I still have to eat those chocolate chip cookies. I don't know. I don't like them. I don't need them. But it's part of the portfolio. Okay, great. I'll buy one, right? I like 2% milk. So, okay, great. I'm going to buy, oh, no, it's kind of high right now. I think I won't buy that. So I won't buy Robinhood right now, but it's kind of all right. And you see, that's like what's happening right now. If people could just go back to basics and go, man, there are things I like and do and R and M, and I have NVIDIA in my computer, and I have Apple phone, and I have, all of a sudden they go like, wait a minute, I already know how to invest, but I don't really want to do it because I'm scared. Now, Warren Buffett says, if you can't handle a 10% dip, you shouldn't be in the markets in the first place. So understandable, right? But you're right about CoreWeave. I mean, this was an integral part of AI. AI is the biggest narrative. And look at the stock over the last 4 days.
And when you begin to see that, what does it tell you? It tells you that smart money, look at that move up. Is that a daily chart, Steve, or is that hourly?
That's an hourly chart. I'll pull a daily chart up. Look at this. I agree with you on the daily chart. That was so easy for me. Yeah.
I mean, because they talk to you, and keep your analysis simple. Look at the high, look at the low. Is it a higher low? And bingo, there. Look, I mean, so where is the break point? Well, if you go over to the left on that shoulder there before it snapped higher, there's your break point right there. If we get much above these levels, it's going to start running for that high. It's very simple. And when I say it's very simple, I mean it from an analysis point of view. Machinery is doing so much of this execution. So that's why I follow daily closes, weekly closes, monthly, because they are definitive points. What does that mean? That's what machines use. They must use a definitive point as a closing level, as the high of the run, the low of the run. They use points that automatically will translate into actions on their part. And if there's anything that I can do that I really want to do for the viewers, my whole career was spent from 2003 being in the electronic marketplace. Okay? 2003, 23 years ago, I helped work with an incredible team of developers in bringing automated manual trading to the automated space. And that's why I try to offer these points of wisdom, kernels of knowledge that you can use when you sit there going, what the heck is going on? Boil it, keep it simple. The machinery, it operates off of definitive levels, and those are highs and lows. Closing levels is what makes the model begin to turn. If you begin to have higher highs, if your closing levels suddenly start building upon one another, then you can easily look at risk management going, well, if the next close is higher, they got to all begin to turn. If you break below these successive closes, you exit your position. You risk minimal, but you can catch these machinery over, moves that just seemingly, as Steve's been pointing out, these rounded bottoms, and then suddenly you see the successive highs. These are the moves that are easy for humans. We can just watch the machinery, and we can just.
But Steve, what do you say to people who say, "Well, I'm just fighting the machine every day. I'm just fighting an algo. I'm fighting another algo. Fighting the machine. Fighting on the computer. Fighting on the tech thing. I don't know what to do." Right? What do you tell people to say that to me? And they say it to me all the time, and I just tell them to ignore the noise. Do what you think's best. Right?
Well,
Your
Steve,
gut.
Yeah, your gut. Yes, use your Steve. You just showed, rounding bottoms. You brought the father of the Warren Buffett to the table here. Warren Buffett says, if you want to be an investor is medium long term, right? If you want to be an investor, A, you got to be able to withstand the downside, but B, you invest in things that make sense to you, like Warren Buffett. Right. Liked Burger King. He was eating it for lunch. He bought part of he loved Coca-Cola. He bought part of the company. So, keep it simple. Don't get all caught up because the narratives and the noise pollution is meant and designed to confuse you as an investor, because that's what it takes advantage of. Everybody goes FOMO, and then all of a sudden, it goes straight down, and you're like, what was that about?
And then the algos pick it up, and then it exacerbates, and the derivatives pick it up, and and that's why I'm not putting all the cash. That's why my major investments are not. They're just sitting there. I've never touched them, and I just add to them. But the trading side of things here, I just pick up when things get beaten up. I sell when things get out of control, and you're seeing that today. I mean, the spreads are so wide lately, Steve.
Yeah, and Steve, very important point. When spreads widen, and you detect that, what does it mean? It means that there is an underlying concern of liquidity in the marketplace. And that's my point for March. That is what I think March is going to be. You're going to see a lot of these, sharp trades up and down, and you want to take advantage of them.
Yeah, I mean, like, I'm looking at IBM right now, and I mean, see, this is it's weird as it can be, right? I'm gonna pull up a 10-second chart here. I don't know if you can see this. Here we go. But look at that. I mean, you can when the numbers hit, boom, and then they sell off. It's like it's algorithmic trading on steroids. It just doesn't stop.
On steroids. And as I've been highlighting to the viewers, Steve, about these new AI social sentiment models, they just, I've started to ask, my AI, in the mornings, I'm like, give me an idea in social media. Are we positive or negative? And today it said that they detect a shift from negatives to positives.
Yeah.
And, we've talked, Steve, about using all your AI engines here.
24.
And trying to develop some sort of a social sentiment indicator that, might be able to be displayed. Hey, today ours has moved from a minus 0.7 to a plus 0.4. That's a fairly sharp move over history. We can begin to evaluate. Does it translate to a change in the market? But we're fighting that, and that's noise pollution.
Exactly, and that's what we have built here. We got past that. The new machine that we're working on right now, it's done, by the way. We'll be releasing it here in a few weeks. And you can see here what it's like. What I was. I'm sorry. I thought I brought it to the stage here. I apologize for those of you who weren't paying. There was the short sell off there, and right back up. So you see the numbers here. The lines are out there, and that's what the algos are picking up, right? That's what I'm saying. Use the algos to your advantage, because the algos don't have an advantage over the humans. We have the advantage over the humans. The only thing that they have is the speed of the trade. They have the speed of seeing it. but we see it long before that they see it. They're waiting for the numbers to hit. They don't make trades so the numbers are hit.
Yeah, we cannot compete with machines in speed. They've won that. They can execute trades under 2 milliseconds. There are 1,000 milliseconds to a second. You blink your eye, it's 200 to 300 milliseconds. So we can't compete with machines there. Don't try to. And don't get so, caught up on levels. If you have an idea, get in the market. Don't worry about the level. Never enter the market with a full amount because, you've got to test. Always go in. I always say, if I'm going to use $10 as my trade amount, then I enter with 2. Because once I buy 2, I'm now in the pool and I can tell you exactly how that water feels. Is it cold or is it nice? Do I want to stay in or do I want to get out? And when I only enter with 2, if it's a bad decision, bad timing, I don't lose much.
And what are you dipping your toe into, Steve?
You mean where am I looking? Where am I investing?
Looking for alpha, yeah.
I'm, Steve, to me, it's just tech, clear and simple. And I stay with the big names, no matter what happens. Google's an investor in so many different things out there in the marketplace. A lot of these private, like, for example, OpenAI, or not OpenAI. What's the one Google's involved in, Steve, the AI? Gemini, yeah. All these things are going to be positive. Meta, I mean, look at the moves that Meta's been making recently. AMD, from a chip point of view, NVIDIA, these, and I'm looking at CoreWeave. I am a player in that as well, long term. The downside move, I have a view. I know where I believe the market is going. I watch politics as, that can be a disruptor to me. Like last night, I was disappointed. I was really looking for a middle of the ground. What can we do together? I really thought that could be a catalyst in the marketplace. Didn't get it. But I still have my view that tech will lead us. AI, it's in the first inning. People are saying it's overdone. Baloney. It's just begun. People are just beginning to use AI. And when I talk to my friends still in the industry, which I'm a little surprised at, they still have not fully adopted AI down to the working level, the desk level. Yes, they use it on predictions and their predictive capability. You know that they can predict the next tick at a probably 67 to 70% accuracy.
Yeah.
I mean, that's phenomenal.
Yep. But see, the latest numbers right now is that 0.03% of Americans actually have a paid version of any kind of AI. 0.03%. So the AI world is just, we're not even in the first pitch, the first inning yet. We're warming up in the batter's box, right? I mean, it's not even, this is getting ridiculous. I mean, AI is going to take over the world. People need to understand that, but it's not going to take over our lives. They're not going to see Terminator come down. They're not going to see Arnold Schwarzenegger, naked Arnold Schwarzenegger trying to take over the world. It's not going to happen.
I mean, is that a risk?
Yes,
in
it's a risk.
15 to 20 years? Yeah. What sort of percentage risk? I don't know, 5% maybe. That's high, but maybe 5%. I'll keep that in mind. I mean, how many times do we see these movies and 20 years later, all of a sudden we're like, wow, and I use the point when I was a kid, 2001 Space Odyssey. And I used to say, holy, when that happens, 2000, I'll be how old?
Yeah, I did say that. Yeah.
Come on, this movie came out in the 70s, and we were talking about AI then.
And Dick Tracy, when my dad was talking about, having being on now the day I make phone calls from my watch. I actually see my mom on the watch, right? So I understand that. Yeah.
Yeah. So this is just beginning. Will it affect everybody in one way or another? Yes, it will.
Yeah.
And you know what? For those people, and I have a lot of friends who say absolutely no way it's going to happen with me. I'm like, you got a business, don't you? He goes, yeah. I go, how do you do your inventory control? Well, I go through and I take out the pad and paper, and I'm going, well, why do that? Why not just have this, AI model, boom, look at everything and can give you complete inventory. In fact, it might even make some suggestions. If you can save 10% off of your expenses, isn't that a big in your pocket savings? And they're like, yeah, it is. I'm like, well,
I mean, Steve, I used to hate Christmas because I knew that meant that I had to go to my parents' stores and we had to do inventory, and I absolutely hated that. Counting pills, counting shelves. I dreaded it. I was like, I would just rather just not even have Christmas if I didn't have to do that. And today we don't even do that anymore. So that's that's just All right, Zora. Yeah, Zora, thank you for watching. Appreciate that. Yeah. See, I really think there's a couple of areas that we really haven't talked about, and that's defense here. RTX is down 2.13%. Is this one that are you interested in Raytheon or LMT?
Steve, yeah, to be perfectly honest to the viewers, I missed that boat 20 years ago. I don't know why I was blind to that one, because the world was no safer 20 years ago than it is today with the threat of war and everything. Why would you not be, super long in these companies? Not only in the threat of war, but they're also at the leading edge of AI development.
They are. The new F-22 Raptor is almost all AI. I don't think we'll have human pilots in the next 20 years.
Steve, the F-47 that is, whether it's in production now or not, but is proposed by Boeing, I mean, there'll be a pilot and he'll have 3 to 4 remote planes flying with him. When we used to say, well, a pilot can only make a turn so sharp because they black out. You've seen it in all the movies. But these planes won't have that because they'll have no pilot. So they can literally stop on a dime.
And this is the new F-47 that he's talking about, the new Boeing. This thing is unbelievable. Yeah.
Yeah. I mean, this is incredible. What about submarine warfare? I mean, if you read all these things, they've got the one like the manta ray, it just sits on the bottom. I mean, they're all remote. They're pilotless. There's no humans being pushed into them anymore. So, yeah, from a defense point of view, Steve, why wouldn't you be in these? But they are FOMO trades. A lot of people have bought. I prefer to watch and wait for a dip on these. I am not invested in them. I missed that boat. When I miss a trade, it goes away because I don't want to sit there going, oh, I should have bought that. What did I, because then I end up making a bad decision.
But it being down 5% here is interesting to me.
Yes, I agree totally. Because whether there's an active war going on or not, they are still developing state-of-the-art AI computers that can be utilized, because that's where it starts. And then, like in the finance market, machine learning has been going on since 2017, 2018. And now you begin to see it spilling out into more practical use for everyone else.
Looks like AppLovin's pushing here up 6% here. I guess some of the software names that have been beaten up are getting some love again here. Your VIX is down 2% today. Your protection, I guess.
Yeah, and I'm gonna wear that one, Steve. That's anything.
Explain that. What you mean? What you say? Well, I'm gonna wear that one. Explain that. That's old school, and that's old school institution.
Yeah, well, I have a larger portfolio against. So if I have a 5% volatility, for the downside on, okay, it's 5%. If I'm going to lose money in that on a day-to-day basis, so be it. I'm going to make more money on an up move. But if NVIDIA's earnings disappoint, guess what? I will be loaded up by the end of the day, and I'll take the position off or slice it in half and take that loss. But if NVIDIA disappoints, guess what? That'll be, that could be a 15 to 20%, play.
Oh, I will. If NVIDIA does disappoint tomorrow, but I do not expect, Steve. I do not expect it to disappoint in any way, shape, form, or fashion. I expect it to beat. But if it does and it gets sold off tomorrow, I guarantee you I'm going to wait a couple of days and then I'm back in, baby. I mean, that's going to be a gift and we can't help.
Of course. and that's why I put a defensive play on, so that in that move I would, because it's a leverage play, and I would cover some of my losses by making in that. So look, it's not 100% play. It's not going to protect my portfolio, but it gives me some sort of ability to trade a risk that I'm worried about.
There's the IBM play. Now IBM now on the highs of the day here, 236.57 now. IBM now 236.81 now on the highs of the day. Yesterday we liked it, like it even more today. We broke past yesterday's highs, and I'm really happy about IBM today.
And Steve, look at, is that a daily chart, Steve, or?
Yeah, this is daily chart right now. Yeah.
Yeah, look at those moves. That's IBM. This is a stock that pretty much stick it in the mud, come back 5 months later, and it's marginally higher or lower.
Right.
When you begin to see a bellwether stock like that moving like that, that is an indicator that something that, as I like to describe, the tectonic plates underneath are beginning to move. Does it break to an earthquake? Maybe. At least it's a higher. That's telling me that, something could be happening here.
Right, and we know where the sellers were, that we broke through that. So that's definitely a good sign here.
And my point is that this isn't, when it moves like that, as you've been doing, Steve, this is an opportunity to say this is way overdone. This doesn't.
You're absolutely right, Steve. And as everybody here knows, I doubled down yesterday. I am going to take some off today. Yeah, I just did. I took some off, half off of yesterday's edition.
My gosh. Am I going to use the word easy money?
Easy money. No, that was easy money.
I won't use it, but I will say this is the type of opportunity that machines, which dominate today's trading, offer us, the human who has sensibility and can say, that's overdone. Come on, it doesn't belong here.
Palantir now pushing up almost 3.25% here. Palantir now, that was the one that was totally beaten up here.
There's another
Bitcoin.
one.
Bring it to me, Steve. You like Palantir, man. Talk to me about Palantir.
They're involved in everything, as the government goes, they're in the center of it. As this whole AI world turns, Michael Burry can have his reasons for doing it. He's, a procrastinator of negatives. He scored one time pretty damn big, but that doesn't mean he's going to get every one of these right. I think it's a different type of thing. The mortgage-backed securities that he looked at was, a great call on his part, and, kudos to him. But this one's different, and I don't think it has the same ingredients that he's using. So Palantir, I think, is at the center of it all. A great buying opportunity we've seen here.
Yeah, and I took advantage of it. I still own Palantir. I own quite a bit of Palantir. I liked it at 35. I didn't like it at 200. I thought it was too much, too fast. But this dip that it went through, I like that because people didn't really understand Palantir, and then right back up, it started to move up, and I do like that move. And I'll show you what I mean by that.
Yeah, and while you're showing, I took 1/3 of my position off at 200 as well, because you're a long-term investor. When something moves like that, you're like, okay, you're giving me money.
Right. And I thought it was, people don't, I was at a dinner. I tell a story all the time. I was at a dinner in New York, and Steve, give me a stock to look at. Palantir. I like Palantir. That's a dumb stock at 35 is what it was. And I was like, I don't know. I think I'm buying pretty heavy. Okay, maybe I'm wrong, but I don't think so. They didn't understand what Palantir did. They didn't understand the behind the scenes, right? And that's why I saw these moves here. You can see there that these big rounding moves here. So I like that. But now the round and bottoms are happening again. So I like that. Yeah.
I keep saying to you, Steve, you should allow your little AI to track everything that you do and say, because you could automate you.
We already have. We've got some clips coming in. It's already automating me. So, and pretty soon, Steve, you'll be able to do that within the system. We're going to be revealing a pretty cool machine pretty soon here in a few weeks. Almost all of it's done. So, for those of you at Quasar Markets, appreciate you watching us. Good numbers today. I appreciate all the tweets and the comments, and I love that. All right, we'll see you guys right back here. And again, Steve, thanks. I'll see you on Friday.